The crypto market is volatile. Most people are glued to the charts, panic selling their portfolios. But what if I told you this is where the smart money is quietly making moves that could build generational wealth? You have to ignore the daily charts. Forget the noise and the fear. Welcome to Generational Wealth, your pathway from knowledge to legacy. Today, I'm sharing the 3 cryptocurrencies that are the core pillars of my long-term strategy. These aren't just coins. They're technologies I plan on holding until at least 2030. I'm about to break down the fundamental reasons why I believe they will be cornerstones of our future financial system. And just a reminder, this isn't financial advice. It's a look into my personal, long-term thesis. It's easy to get lost in the chaos. Every headline is screaming about volatility, and every tweet is either euphoric or apocalyptic. This kind of short-term thinking is the single biggest wealth destroyer in crypto. The solution? Tune it out. Real value isn't created overnight. It's built over years by projects with solid fundamentals. My strategy is simple. Find the networks that are building the future, invest, and hold on. That's why I'm betting on Solana for its speed, Cardano for its security, and Stellar for its real-world utility. Let's get into the first one. First up is Solana, SOL. I like to think of Solana as the financial superhighway for the digital world. Its main value is simple: unbelievable speed and ridiculously low costs. While other blockchains get clogged and expensive, Solana is built for massive scale. But it's not just about speed, it's about what that speed makes possible. We're seeing a flood of institutional interest because Wall Street runs on speed. Bitwise's CIO, Matt Hougan, has even called Solana the new Wall Street because of its unmatched throughput and how quickly it finalizes transactions. We're talking about settlement times dropping, which is a metric that high-frequency trading firms on Wall Street care about a lot. This is attracting serious money. Institutional investors are putting capital into Solana, and its stablecoin market share has grown to represent $13.9 billion. The second reason is relentless innovation. The upcoming FireDancer upgrade, developed by Jump Crypto, is a total game-changer. It's a new validator client built to dramatically increase transaction throughput and improve network security. We're also seeing the Alpenglow upgrade, which promises to slash transaction finality time to as little as 150 milliseconds. These aren't just small tweaks. They are major improvements that cement Solana's role as a leader for decentralized finance and business solutions. If you're getting some value from this long-term perspective, do me a favor and hit that subscribe button. We're cutting through the short-term noise together, and I've still got 2 more of my long-term holds to break down for you. Next on my list is Cardano, ADA. If Solana is the superhighway, Cardano is the skyscraper built on a peer-reviewed, military-grade foundation. Its development is slow, methodical, and deliberate, and that's its biggest strength. In a world full of hacks and exploits, Cardano's focus on security and sustainability really makes it stand out. The first key driver is its research-driven approach. Built on a proof-of-stake model, Cardano is incredibly energy efficient and scalable from the ground up. The 2025 roadmap is focused on creating a strong foundation for a decentralized global economy by improving the main layer's performance and growing its Layer 2 solutions. This isn't about chasing hype, it's about building a tough network that can be trusted with essential applications. Second, the ecosystem is entering a new growth phase. The Cardano Foundation is injecting an 8-figure sum of ADA as a liquidity fund for stablecoin projects, and is launching a real-world asset project valued at over $10 million. This is grabbing institutional attention. Hashdex recently added ADA to its Nasdaq Crypto Index US ETF, which is a huge step for its acceptance in mainstream finance. The focus is on real-world uses, from supply chain management to financial services in developing nations, making it a powerful long-term bet on sustainable growth. Last but certainly not least is Stellar, XLM. Stellar isn't trying to do everything for everybody. It has one clear mission: to make cross-border payments faster, cheaper, and easier for everyone. While traditional payment systems lose an estimated $200 billion a year to fees and delays, Stellar can settle transactions in 3 to 5 seconds for a tiny fraction of a cent. Its main strength comes from its real-world partnerships and adoption. Stellar has locked in strategic alliances with huge names like MoneyGram, PayPal, and MasterCard to make cross-border payments more efficient. These aren't just ideas on a whiteboard. They are live integrations already processing billions in remittance transactions. In 2025, partnerships with PayPal for its PYUSD stablecoin and with Societe Generale Forge for its Euro stablecoin have grown its institutional use even more. The network's growth is hard to ignore. The launch of its smart contract platform, Soroban, has already brought in hundreds of new projects by offering scalable smart contracts with incredibly low transaction fees. Stellar is quietly building the framework for a more inclusive and efficient global financial system, and that's why it's a must-have in my 2030 portfolio. So that's my long-term thesis. It's built on Solana's pure speed and institutional magnetism, Cardano's rock-solid security and steady growth, and Stellar's real-world application in global payments. These aren't lottery tickets. They're investments in foundational technologies that I believe will help power finance for the next decade. Forget the daily panic. Focus on the fundamentals and think in years, not hours. What are your must-hold assets until 2030? Let me know in the comments below, and let's keep the conversation going. Be sure to join our insiders group on our website at generationalwealth.biz. Thanks for watching. Quick disclaimer. I'm not a licensed financial advisor. This is for educational purposes only. Crypto is volatile. Never invest more than you can afford to lose. Do your own research.